All right, hey everyone, Mark here, Mark P Markets. Hey, thanks for joining me for another Bitcoin video analysis session. If you're new to the channel, welcome. Let me just explain to you how this is going to work real quick so you have an idea of how to get the best out of this. All right, so first, I'm going to go over the economic calendar, right? You should all do this every Monday. Today is Monday. And you want to make sure that there are no major announcements in front of your trades, right? So it's a way to mitigate risk. Then after we take a look at that calendar very quickly, we are then going to go into the Bitcoin analysis. All right. So I wrote my TradingView article yesterday. Hopefully you've all taken a look at that. And I even drew a little roadmap as to the scenario that I'm looking to trade as far as a swing trade goes. And that's what we're going to talk about here today. So I'm going to get into that second. And then third, I'm going to answer your questions about the Bitcoin chart. Also, if you have questions about stocks or altcoins, I will answer those as well. So now is a good time to share your questions in the channel. I'm simulcasting here, so my YouTube people, you can put your questions. My TradingView people, please put your questions now about an alt or a stock. If it's an altcoin, please make sure to put USD or USDT after the symbol so I get the correct one, okay? And one symbol per person, please, so I can have the opportunity to answer as many questions as possible. All right, so with that being said, let's get this thing started, shall we? Let me pull this thing up. All right, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now, let me just say hello to my people. I got Eligius, Mr. Plow. All right, man, where is everyone today? Hold on, let me move this over here. Let me see what's going on over on TradingView. I guess everyone is away on what do they take, spring break or something? What is this, college? Come on, man, what's wrong with you people? All right, let me just refresh this over. Oh, by the way, TradingView people, if you can't see me, refresh the browser, okay? That usually solves the problem. So just refresh the browser there and that should fix it. All right, so anyway, now would be a good time to share your questions. All right, cool. So hey, Peter, hey, Greg, good to see you all. All right, cool. So let's get this thing started. Oh yeah, by the way, if you want to share what country or what city you're from, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey, which explains the funny way I talk at times. Okay, I don't say talk, I say talk. All right, anyway, okay, cool. Hey, Alan, how are you? Again, thanks for joining. And an honest view on YouTube, gurus. Well, well, you know, I'm a big proponent of you know, being real on this because there's so much nonsense out there. All right, cool. Oh wow, great. 3 a.m. Okay, we have to point that out. 3 a.m. over in Shanghai. That's a trooper right there. I really appreciate your time. Thanks. All right, so let's make this worthwhile. All right, so first things first, economic calendar. Oh, by the way, before I get into that, I just want to mention a couple of things. For one, I've talked about my trade scanner or my auto setups, and we've talked about the stock one before. Well, I got the coin one working, okay, the one for Bitcoin and the altcoins. And at first, it was a little erratic because it was basically looking at day trade timeframes, so it was making lots of calls. And the thing was, many of those calls were actually profitable, but the profits were very small before the thing turned. Okay, these things are very brief movements in momentum, but I've changed the frequency. And its most recent call, just so you know, I want to point this out, was Cardano short. It called Cardano short, okay, on Friday night at 8 p.m. The price that it called was 35.92, right? 0.3592. It was something like that. Now that's not the price that you would actually get because that's basically the raw piece of data. From there, you actually have to pull up the Cardano chart, look at the current candle at the time, and then figure out the trade orders, right? Well, if you had done that, the trade price would have been something like 35.50, okay? And right now, I mean, I checked, it's probably a little higher now, but when I checked a little earlier, Cardano was at 34.01. So that's like, you can basically say that's an equivalent of 150 pips or something like that, or 1.5, what is that? 1.5 cents, I guess. Now, the typical risk on something like that would have been probably closer to 5 cents. So it's hardly justifies the risk at this point. But the point is, you would have a green trade to manage, okay? That, I mean, Cardano is not a coin that I would ever call myself. It's not something I would swing trade myself, but it called it, and there's some green in there, right? So, and that's the whole idea. It's raw data. You just have to know how to use it. And I'm going to be coming out with some more instruction on how to use that information, okay? I'm going to put the video on my channel. It's going to be free, so it's not like, it's not like a secret thing. Also, I want to mention another thing. I called a Bitcoin short a week ago, okay? No, actually, it was on Wednesday. I'm sorry. I called the Bitcoin short on Wednesday. I got to point this out. I called the short on the FOMC meeting day. It was after the FOMC had come out. I'm going to make the chart bigger, but I just want to point this out before that, because we have to go over the calendar. But I happened to call the short on this candle, okay? This is the FOMC candle that I'm pointing to here. Now, I just want to point out that that short was not active that day because I used a sell stop order, which I explained in my TradingView article, right? That short is now active today, and it's actually in the red a little bit, right? That short was actually at 26,500. So, I mean, that's where now do we get follow through of momentum or not? Now, we're going to get into that here in a moment. That's what we're going to talk about. But I just want to point that out. Now, I don't trade Bitcoin short, all right, as you know, and I pointed that out in my article. I always point that out if I call trades. But if people want short trade ideas, it was an aggressive counter trend trade short, and I called it, and it is now active. Okay, so it's something that we can track and see how that goes. Another thing I want to mention is this week, for my, for people who know, my students, I have a private meeting with them. So you guys be prepared. Most likely that will be on Friday. Okay. Each month I do a student meeting where we go over very particular things that my students want to know. All right. So anyway, I just want to throw that announcement out there. All right. Anyway, so with that, let's now jump into the economic calendar. And by the way, if you like my content, if you like my video, please press the like button and subscribe to the channel on YouTube and on TradingView as well. Please press the boost button because it helps out. And if you have any questions about the trade scanner and stuff like that, you know where to find me. Send me an email, send me a private message. I'll be happy to answer. I get some people asking questions, but then I don't hear from them again. So, I mean, ask me questions if you're serious. Anyway, all right. So let's talk about the calendar. You guys check out the calendar this week at all? Anyone want to talk about the calendar? Economic calendar, anyone? TradingView has an economic calendar. You don't have to use that one. Oh, Suzanne from South Africa. I had no idea you were from South Africa. You may have put that before, and I just, it's just I'm seeing that now. Cool. Thanks for joining us again. I've seen you before. All right. Anyone want to comment about the economic calendar? Any important events this week? The previous week we had FOMC, which was probably the event, right, to pay attention to, which was very interesting. Especially if you look at the bond market and stuff. Okay, so Peter says Tuesday ECB. Yeah, so there are a couple of there were some minor things. I have to say, Peter, this week was a very minor week in terms of economic news. All right, we have a couple of announcements, like a couple of like ECB press conferences, whatever they are. There's just some talk from some of these central bankers, and then like on Friday, I believe it's Thursday or Friday. No, I think it's Thursday. We have U.S. GDP. All right, which is usually not a big market mover, right? Because the market knows the information because GDP comes out after all the other inflationary information, right? The inflationary information like CPI and PPI and all those things, those are much more important numbers. So in this week, right, you got it, Gray. This week, I would say this is a very light week in terms of news. There's really not a whole lot to be concerned about. We have no FOMCs. I don't see Chairman Powell testifying anywhere. I don't see non-farm payrolls, right? So it's a quiet week, right? Which can be good when it comes to putting on positions because you don't have to really worry too much about event risk. Okay, does that make sense? All right, so let's move on because there's really not a whole lot to say about the economic calendar. But good job, you guys, checking it out. You should be in the habit of looking at it each week. All right, so let's move on and let's make my chart bigger first. Okay, hold on a second. Let me do that, and then we will continue here. There we go. All right, now, so Bitcoin analysis. Hey, Alex, can you talk a bit about storing value? Looking at monthly time frame for assets. Okay, that's a good question. I'll definitely answer that question, Alex. Good question. Anyone else want to put your questions in the channel? Now would be a good time. All right, let's talk about the Bitcoin analysis, shall we? How many of you looked at my TradingView article yesterday? Because this is the chart, right, that I basically published. And when I published that chart, I just want to point something out here. When I published this chart on TradingView, it looked like this. Okay, that red candle that we have right now was not there. We just had this green candle developing, right? And it was basically a buy signal in progress, which I referred to. Now, of course, I wasn't going to go near this buy signal because the location is far from ideal, okay? So I drew this little roadmap, as you can see on the chart, right? Which I don't do this often, but I figure this might give some more perspective to people. And I want to explain this roadmap because this is not an opinion. All right, this is not some kind of definite expectation. This roadmap here, it's one scenario of infinite scenarios. The idea is not what I think. The idea is if the market wants to confirm this, it's up to the market to do all the work. All right, this is just the scenario that I want to see. So will the market present this scenario and will it confirm it? Well, that's up to the market. Now, so if the market confirms this, all right, basically the retrace to 25K, and as you can see, the progress, the movement has started, right? We have this red candle today. It's almost like an outside bar, not exactly, but it took out yesterday's low, and the movement should take us back. If this momentum continues, we're looking at 25K area, right? Why 25K? That's the next support. When I'm looking at these things and I'm coming up with these ideas, it's all primarily based on structure, price structure, and levels. Now, I teach 6 steps, right? The first 2 are price structure and levels. Now, are the other steps not important? No, they have their purpose. But if you really want to simplify the whole process, especially my students who've all taken the program, you can just focus on steps 1 and 2. Right? And that's going to give you the most perspective, right? So wave count aside, fib levels aside, it's all about structure and levels. So we had 28K resistance. The market got stuck there, right? And gave us plenty of noise up there. And one thing I want to mention is, when I called this short over here based on the FOMC candle, which is what that is, if I was reactionary, which I'm not, then I would have had to have taken some pain. Right? Because the next day this thing was touching 30K. I wonder how many people were calling longs. I wonder how many of you followed some fake guru calling along for absolutely no reason. There was no reason to be long here. Okay. That was a resistance area, high risk long for swing trades. Day trades are another story, plenty of opportunity, but you have to know where to get out, right? You have to know where to take your profits and define your risk. Now, since then, we had this inside bar here. I could have called a short on that, right? That was a much better price, 27,378. But the thing is, I had my price set and that was it. I wasn't going to change it, right? And it took until today for that thing to be reached. My point is, by using a stop limit order, okay, a sell stop order, sorry, not a stop limit order, a sell stop order to enter the market, it removes me from the equation. So I don't sit there and second guess or, go by what I think or react to the moment. I don't do that. I have a plan in advance, right? So basically what you see on this roadmap here is basically a plan in advance. I'm anticipating. I'm letting the market come to me. So I don't short, like I said, it's an aggressive position and Bitcoin is not exactly in a bearish configuration right now. So the short has should have a very low expectation. Now, I'm not going to mention here where I put the price target on something like that, but I'm going to say this. If I get the buy signal here in this area that I'm pointing out, okay, if I get the buy signal, I am going to suggest exiting that short, which at that point will be green. It won't be really green and the risk won't be justified, but I will suggest exiting because, again, we have to go by the structure. The structure, no matter what we think, no matter what our opinions are, the structure is bullish, right? The market is saying bullish for now. That can change, right? Because we have to be open to anything. But right now, that's what it says. And as long as it says that, I listen to it, okay? It doesn't matter what I think. I listen to the market. So if we get the buy signal here, right? I want to see the confirmation. That's the 25K support area. If we see that over the next few days and I see the long signal, I will share a swing trade long. Now, if we get that long signal, I'm explaining the plan here. This is the swing trade plan, which is the title of this stream. If that becomes a long, right, the stop is going to have to go somewhere at the low point of the entry candle, wherever that is. I don't know that right now because I don't have an entry candle. So the market needs to establish those things before I can actually quantify my risk. But if I go by typical movements, typical risk on this thing is about 2,000 points on it for a swing trade, something like that. So I can assume a number like that, okay? But it's wise to wait, let this thing get there, let this thing do its thing, and then we can quantify the risk. Now, once we have this, if this thing turns around, right, then we're targeting 28K, 29K, 30K area. This is going to be the first target area for the swing trade, right? So if I'm risking 2,000 points and I'm buying this thing around 25K, right, and this thing makes it to 28K, that's a 3,000 point profit, right? That's 1.5 to 1 basically. So that's acceptable if it can get there. Now, again, there's no guarantee that it will get there, but that's what I'm looking for, right? That's the plan. And of course, the market is going to have to agree. If it doesn't agree, we adjust. But if I take the long, that's the first target and the conservative target. Now, if this trend stays intact, right, and that's why I drew this part over here. If it stays intact, then we're looking at a breakout, okay? And the next resistance on that breakout is this area here, okay? And that's what, 33K, and that dates back. Look where it dates back to. It dates all the way back. I don't just randomly come up with these numbers. These are historical levels, all right? And my students know what that means. So that's where it's relevant right there, right? And so it can touch that area. It's possible if it can break out, all right? So that's what I've just described here is basically the ideal bullish scenario. There's no guarantee we're going to get that, right? But first, of course, it needs to reach that support. I mean, if I think all this, why not just buy it here and hope for the best? Because 25K is where the high probability is, not 27K. This is in the middle of nowhere. Anything can happen here, okay? This thing may find support sooner in turn, which I may have to adjust to. But the price that I want to see is 25K. It's a historical support. There's price action there previously. There are traders caught in that area, and that's where I want to be long if I'm going to go long, okay? So that's the bullish scenario for the swing trade long idea. Let me explain what can go wrong. So remember, the market does what it wants to do, not what I think it wants to do. People say to me all the time, well, I say, well, why do you think? The market does what it wants to do. Markets are random mostly, okay? So it's very possible that this 25K can break, all right? Now, what's going to help that along? Well, you have to understand that markets do not trade in isolation, right? And we need to look at other markets, primarily the bond market. This is the bond market, the 10-year note. Now, many of you, people who follow me know to look at this, but people that are new to this game have no clue. Fake gurus will never talk about this because they don't know, okay? Bonds basically control the world. It's interest rates. So this is the 10-year note. Look what's happening here on the 10-year note futures, right? So we had this run to safety, right? And that was that Bitcoin move and gold and all that. It was a run for safety, people overreacting. Have you seen the nonsense news and the nonsense on YouTube about all this bank stuff? Okay, yeah, it's drama, blah, blah, blah. And everyone runs for safety. But look where we are now, okay? So I saw this move in the bonds. I was like, man, that's an interesting move. But can it continue? Today, we have a sell signal on the 10-year note. So that doesn't mean that this movement is broken yet, but look at the level, okay? This selling activity this is what I would expect from this level. If I was going to short the bonds, this would be the place to do it, okay? So this right here tells me that rates may start working their way higher. The Federal Reserve is still raising rates, right? So this reaction may have just been an irrational overreaction to all the nonsense. That's how the herd mentality works, okay? People do not make rational choices in the markets, and that's an incorrect assumption that a lot of people make, right? So if this was just an overreaction and the bonds work their way back to this area right here, if the bonds do that, then Bitcoin's probably not going much higher, okay? Same with the stock market. because rates will be rising again, and nothing speculative like Bitcoin and stocks, they don't like a rising rate environment. It's bad for things, right? That's why the banks had such a hard time with their bond positions because of the rising rates. So, but the Fed, whatever. I have not watched his press conference. I don't know exactly what he said because I only go by how Price interprets it. And all I know is right now, the bond market has turned the other way and there's a sell signal. So how far does this thing go? We'll see. Now, if we look at a weekly chart, okay, this is the bond market on a weekly chart. Look at this. So this trend on the bond market is not exactly bullish, right? This price action over here in this area may just be a consolidation, right, where it expands, right? We have like a consolidation that expands. There's a name for that type of triangle. And if that sticks up there, if that sticks and this thing and that resistance can't be taken out, we're looking at a lower low on the bonds because there's nothing bullish about this, right? I don't see, we sort of took out a resistance, but it's turning again. We're not clearing it and just keep going, right? And we've taken out resistance levels before on the bond market. Look at this. This is a weekly. So we close negative on the week and then we start pulling back on this thing, a lower low is likely. So I'm pointing this out because this is important for our Bitcoin analysis. If the bond market wants to be bearish, which it may be, then we can't expect much from that Bitcoin long. And it's very possible if the bonds really start moving, right? It's very possible that Bitcoin actually breaks below 25K and never gives us a buy signal. So do you understand? That's what can go wrong with the long. And that's why you have to have that plan in advance. You have to understand that. What can go wrong? Let me pull up my 8-cap chart here again. Okay, so you have to understand that that's why I say this scenario is just one of infinite scenarios. So either the market confirms this for me and I can justify my risk at some point, or I step aside. The market's going to make that decision for me. If this thing clears 25K, we're looking at 20K again. All right. By the way, the short that I called previously on Bitcoin was over here at 24K, whatever, 24,150. You realize I called a short there. Okay. And the exit for that short, which was called on the same day of the short, was 20,150, which was right in this area here. If you had followed that exit, you managed to avoid this, which would have stopped you out for a loss. Okay. So again, how do I know that? Do you see me using oscillators? Do you see me using any kind of magical tools or some kind of gimmick with arrows on it or something? No, I know price action, I know structure, and I know how to assign probabilities. Okay. I picked 20,150 for a reason, not 15,000, not 10,000. There's no opinions. I recognized that there was a support in that area and it went there and turned around pretty quickly, right? But that's when the banking drama started. All right, so no one sees that coming. That's why markets are random and you have to respect the structures, okay? All right, so that's my Bitcoin analysis. Let me go, I see a lot of questions here popped up. So let me start answering some questions. All right, good questions. Let's see what you guys got. All right, so let me know if you have questions about this Bitcoin situation, and I'll be happy to explain further. Okay, so are we clear on that? So just to recap real quick, I went over the trade plan for the long, right, which is to pull back to 25K, waiting for confirmation, identify my risk, and then look for that long setup, right, and let the market do the rest of the work from there. But if 25K is cleared, and we have, if we have the bond market is behind that and supporting that, then step away from this thing. Okay, then I step aside, no longs. All right, you have to keep an open mind, no opinions. I have no idea where this market's going. All right, so let's see what we got here. Hey, Elijah, it's good to see you. All right, appreciate that. Okay, cool, Mr. Plow. Yeah, I don't think I've started any rants yet. Okay, cool. So I said hello to you guys. All right, so that was the economic calendar. All right, so now, Alex, can you talk about a bit about storing value? It's looking at a monthly time frame. You don't need to look at a monthly time frame, Alex. A weekly is adequate. You really don't need to look at a monthly. You can if you want to, but for assets, help us understand what's best. SPX, Bitcoin, gold. Well, first understand, you understand their roles, right? The role of Bitcoin is to store value. The role of gold is to store value. So everyone runs to these markets when there's a inflationary problem or instability problem, right? And that's what the dollar was looking like. But again, I think it was just an over exaggeration. So it's just very simply a safe place to put your money to protect against inflation, right? And I think Bitcoin really stole a lot of the spotlight away from gold, because at one time gold was the only place to do this, right? Pretty much. But now we have Bitcoin, and Bitcoin is a lot easier to deal with. You don't have to deal with that CFD nonsense. You don't have to deal with futures nonsense. You can just buy Bitcoin and then take it right out, right? And it's within about an hour, your money is back in your hands. So it's much more efficient. And something like this never existed before as far as an alternative to gold. You always had to go to gold, and gold is a pain, as you know, because what are you going to do? Buy physical gold? So the point is, it's just a hedge against inflation, right? It's not something, whenever there's a move like this, you have all the propaganda people come out. Gold is going to 5,000. Bitcoin's going to 1 million by tomorrow. You don't get caught up in that nonsense. If you need to protect your dollars or your local currency, I know you're in Romania. I don't. Are they in the euro? I don't even know. Or do you have your own currency over there? If your money is becoming worthless, you put it somewhere so that you retain the value, right? If you're in Argentina or if you're in Venezuela, what do they? They buy dollars over there. They buy dollars for more than $1. All right. I guess they don't have any Bitcoin ATMs over there. I don't know, but their money's worthless, right? So that's really the only purpose it serves. And it's just a temporary hedge. It's not something that you say, well, I'm going to just invest all my money in this. I mean, you can, but these things are highly speculative. And these situations where you need that protection aren't very frequent. If the Fed works on this hard, and the Fed is hard, and the Fed doesn't care about these banking problems and whatever, and the Fed stays on their plan, then this is just going to be an overreaction, right? And we'll see that reflected in the bonds. So I really don't know what else I can say about that. It's just a store of value is just a place to protect your money temporarily. But once you need to take your money out, once it comes time to take the money out, you take it out. Okay. Now the thing is, of course, if you're buying Bitcoin to hedge against inflation, Bitcoin can also go the other way on you, but that means your money is getting its value back. So you have to know how to, you have to keep an eye on that. But again, these are usually for extreme situations. Okay. I don't want to be confusing about that. Does that make sense? Oh, thanks, Alex, about the article. For storing value. Well, yeah, okay. They tend to go up over time, but there's a number of reasons for that. Again, the S&P is sort of like an inflation hedge. Why? Because when your dollar is going to zero, the price of the stocks, it costs more dollars to buy stocks or the S&P, right? Just like we saw with the Turkish lira and the Turkish stock market, right? There's a similar relationship there. It wasn't that the stock market was great and healthy. It was the money was losing its value, right? The currency was losing their value. So it cost more lira to buy that same share of stock or index. Does that make sense? So that's really that relationship there. So you can think of stocks as sort of an inflation hedge as well. Okay. So, right. But then it gets a little more complex there, but that's the general idea. So good question. Have you started accumulating BTC for inventory? No. What ranges are you considering? I haven't started yet for inventory. No. I was actually looking at 15K. That's what I was considering. And then we had this ridiculous move. So I don't like these general levels. I just don't. So if I'm going to accumulate, and I'm very, very slow. I haven't even started the stock portfolio yet because I was looking at the bond market earlier when, in January, February, and I'm like, I don't like this bond market. I just don't like it. Okay. It's just not clear. This move that we had recently in the bonds, this bullish move, may be a sign of some kind of change, but we have to see if it can follow through. I'm now more interested in maybe putting up some inventory. In fact, someone asked me about that yesterday, and I'm actually simplifying that portfolio. Like I had this complex setup for it, and I'm like, you know what? I'm just going to simplify it, and I'm going to look at like 10 instruments. And I'm just going to keep it simple. I have the instruments in mind. I just refuse to take any positions until the bond market is clear to me. Okay. So good question. But yeah, so as far as Bitcoin goes, I want to see something sub 20K. That's what I want to see. If it never goes back there, then I'm going to have to adjust. But I'm going to have to see some confirmation in other places before I do that. Okay. And if I have to adjust to these levels, like 25K or something like that, then it's going to be smaller, obviously, right? I'm not going to take as big as a bite. I don't take big bites to begin with, but it would be smaller than my typical inventory position. Does that make sense? All right, just to mitigate the risk. It's all about risk. All right, so let me jump over to TradingView. I see all these questions and I haven't answered one. I'm sorry. Let me go back here. So, hey, Steen, I think I figured out that problem that you've been having with the. I just have to fix it, but I think I figured it out. I will always read. Oh, appreciate that. Appreciate that, Resley. Okay, cool. Glad someone reads them. All right, Mind. Here's my question. Okay, looks like a big question. The yield curve has never been inverted this much and for this long. Do you think this is okay? Do you think it's for a recession? And if bond prices were, does it mean the big players are trying to hedge their positions? I have been watching the auctions for treasury bills and bonds, and they are all selling for a lower yield. Okay. And they are all below the Fed reverse repo rate. Is that also okay? So the inverted yield curve is a typical sign of recession, right? So yeah, I mean, if that's the case, then history says that recession is on the horizon, but it may be priced in. So that just, you could take that as a sign of that. I don't look at the 10-year and 2-year cross. I'm not looking at that. I'm just looking at the 10-year note, right? I'm just looking at basically the interest rates, and I'm looking at the bond prices. It's the rates that matter. So really, to answer your question, yes, the yield curve inversion is a sign of recession on the horizon. But the thing is, by the time we get all that information about the recession, we may be in the recession. You know what I mean? So all that is priced in usually into the future. And as far as big players trying to hedge their positions, I mean, bonds can be a place for safety, right, as well. So that's why we've seen that. I think that bond market rally that we saw, a ridiculous move in the bonds. But it's safe to assume that large bond movements are big players to begin with, because retail traders don't trade bonds, right? It's usually banks and government entities and stuff like that. So I would say it's safe to say that it is large players, but why they're doing it can be infinite reasons. So don't get caught up in the why. Just look at the bond prices, look at the yields, and look at the market, right? And there is a relationship there. Just like I point out, in December of 21, the bonds were selling off, and they had sold off dramatically for months while the stock market was making new high after new high. No one wanted to hear about the bond market at that time. But because I saw that, I knew enough not to get involved in stocks. While the whole world was, the next year, we're going to be buying all these great stocks, we're going to do all these great things, and they all bought into the nonsense, okay? I knew better, and I told all my people, stay away from stocks. I must have said it 1,000 times, stay away from stocks, okay? The risk was higher and higher. And in February of 22, the stock market, it caught up to the stock market, okay? If you had known about the bond relationship, you could have protected yourself. All right, Steen, would like your thoughts on PRE, okay? It pumped and is retracing now, currently around previous resistance that could become a support, also in a wave 3, okay? Steen is one of my students. Is this a good area to look for a signal for possible reversal? All right, let's take a look. So that's PRE USDT. Let's take a look. All right, hold on, let me put that on the chart here. PRE USDT. All right, so interesting. Pre-search. All right, I'm not familiar with this coin. Obviously, Steen, there was definitely some hype or some nonsense. How high was this thing? This thing made a high of, what is that? 15, is that 15 cents? It looks like, okay. And this thing is back now to 7 cents. So it gave back half of its value in just a couple of days. All right. So someone got robbed in there, right? Whoever bought the top of this. Anyway, so as far as longs, well, look, you definitely have a structure that is favoring the long side. Let's look back here, though. Let's go to a weekly chart, because obviously this thing has been higher. How high has this thing been? All right, so look at this, right? This is we can see more of a history here. You see that? And what is this? This thing is, the high on this thing was 48 cents, okay? Going back some time here. and it pretty much gave back all of its value, and it's now starting some activities starting again. All right, so here's the thing. I mean, bigger picture, this thing is still junk, right? Basically. I mean, and why is this thing going to rally? If you notice that resistance, by the way, you see a coincidence here? Look at this, right? If you knew this, old resistance, right? Test it again, reject it again. So if anything, if anyone, whoever got sucked into that scam, if they knew that simple thing, they'd be like, oh, this is not a good place to be buying. But who usually gets caught in there? Ignorant beginners who think that markets are easy and that this is just like your personal ATM machine. That's who gets caught there. All right, people that know what they're doing sell to those people, and we've all been there. Anyway, so yeah, to answer your question, keep this bigger picture in mind. All right, you have this bullish structure now changing, right? You have this may be temporary. You really need to start clearing important resistance levels to call this bullish. I wouldn't call this bullish yet. All right, your first resistance level is going to be this, right? You need to clear it. You touched it and you rejected it, right? So you need to clear that to really say, okay, this thing is really starting to go somewhere, right? To really start paying attention to it. But right now, you want to go for like a swing trade or something temporary, or just a small time frame trade. Well, here's what I would do if you were looking for something like that. This is your support right here. This is your minor support at 0.72, right? 0.729, basically 7.25 cents, right? That's basically the price. So I'd let it go and retest that area. Also, you don't have while you have a somewhat interesting location, it can do better, right? This thing's right now at 78. So this thing can pull back another, whatever, half a cent, whatever you want to call that. Wait for a buy signal. There's no buy signal, right? This thing, there's no reason to buy this. So I'd say give it to like that, again, 0.725 area, and let that thing produce a reversal. Now, if Bitcoin, as we saw, Bitcoin is pulling back now, right? If Bitcoin goes to 25K, these things all have a tendency to follow. After the hype is over, right, then usually the Bitcoin relationship comes back into play. If Bitcoin takes out 25K, this thing may keep going, right? So that's why it's so important to wait for a confirmation before doing anything. That's how I would treat that, okay? But again, always refer to that bigger picture. Like, take a look at your weekly chart, find some levels on there first, and it will give you a lot more perspective on what to do with that. Okay, so I mean, if you're looking at a swing trade, yeah, it's not there yet, but you're almost there. Okay, but I wouldn't have high expectations of it. Let's just put it that way until it clears that weekly resistance that we pointed out. Okay, Mind Mint, could you also look at Nvidia on the weekly and give your assessment on whether it might be a three-legged correction? All right, so Nvidia, first of all, is a market stock, right? And you're basically dealing with, let's go to the weekly. You're basically dealing with, it's part of the FANG stocks, right? This is the weekly. It's come back. I mean, it's come back a long way. I remember this thing was at 720 or whatever, it went to 150. I mean, look at this, right? That's a nice comeback. So your question here is, hold on. Have I skipped the question? Let me just go back here real quick. Okay. Oh yeah, I think I skipped the question. No, all right, hold on. So I got Nvidia. I forgot XRP. I'll get back to XRP, but really it should be like one per person. So I'll try to get back to that. Okay, so this is not a three-legged correction. Okay, this is an impulse wave, and I mean the reason why I say that, for one, is I can see clearly. Look, right? Well, you have, this is like your wave one. This is your two. Okay, 5-wave impulses have a very particular look. 3 is certainly not the shortest wave. You have this little 4. Remember, this is weekly, and this is your 5th wave. So you have an impulse wave structure in there, right? That's not a corrective wave. That's an impulse wave. Now, the corrective wave can be coming because you have 5 waves in place, first of all, right? Now, this thing obviously benefited from whatever. Obviously, it must have had good news or something, good quarterly report. I don't know what their deal is. But if rates start rising again, this thing is not going anywhere, right? I mean, this is typically what happens when rates rise. And we looked at the bond market. Semiconductors in particular are very sensitive. Tech stocks are very sensitive to rising rates. So this is in a vulnerable position. Certainly a bad place to be considering new longs. That's for sure. I mean, look at your resistance level. I mean, you're right at a resistance level, right? Look at that. So bad place for longs. If you're long, good place to take risk off the table. Now let's go to a daily chart. So on something like this, again, you want to see a pullback, right, on this to get involved. But since we have 5 waves in place, the pullback may be a larger magnitude. And that, again, will coincide with the S&P, right? Whenever you look at something like NVIDIA, it's a good idea to look at the NASDAQ, okay? NSX, let's go to NSX USD, all right? Because this is going to be, it's not going to be exact, but as you can see, I mean, look at the NASDAQ and look at this NASDAQ rally that we've seen, right? Over the previous month, whatever. I mean, what do you call it? NVIDIA has been rallying since this entire thing, right? It's been going back since the beginning of the year. The NASDAQ is struggling with a little resistance here. If the NASDAQ pulls back, you're probably going to see that broader corrective move in NVIDIA. And that broader corrective move may be 3 legs or more complex in and of itself. So again, we can't roadmap that with any type of certainty, but at least you could say, if I have 5 waves in place, a broader corrective move is likely to unfold next. And now when we look at the parent index, that scenario looks favored. Does that make sense? So keep an eye on that. All right. I certainly wouldn't be touching those tech stocks. Wait for the pullback of some kind. And if you get a pullback and a quick turnaround, don't have high expectations of it if 5 waves are in place. Okay. Because you may get like that first pullback, like a simple pullback, and then like a little retrace gets everyone long. And then you get like the next bearish wave. Make sure you have your expectations set. Okay, keep them very conservative. All right, let me move on to YouTube over here. Good question, by the way. All right, let's move along. So I have, all right, Alan. Oh, okay, so I answered that question. All right. Alex, have you started? Okay, I answered that one. Okay, hey, DWK, how are you? From Sydney, Australia, 6:23 a.m. Man, you're another trooper. I would never do this at 6:23 a.m. My mates from Australia. I can speak Australian. My mates from Australia. I work with a lot of Australians actually. You know, the trading battle people are from Australia. In fact, they're from Sydney. You may know them. All right. Anyway, cool. So good to see you. Thanks for stopping by, my Australians. All right. Levant, how are you? From Turkey. All right. Good to see you, Levant. Okay, ZN1. All right. So all right. So Mr. Plow, the Bitcoin and bond market relationship is not 1-to-1. Okay. So you say Bitcoin is rising. Where is Bitcoin rising? First of all, there's no rising in Bitcoin. If you're looking at a 5-minute chart, man, that doesn't count. There's no rising here. This is a nasty red candle. And that's this thing started my new short, by the way. Like I said, 26.5. We're at 27 even right now. Okay. The bottom of this candle started, put my new short idea into play. All right, so we'll see if that thing follows through or not. But if this thing closes weak or it takes out this low tomorrow, I mean, this thing is on its way on the short side. So I don't know where you're saying rising. There's no rising there. But to answer your question, it's not a 1-to-1 relationship. The bonds do their thing, and then the markets take time, right? When the bonds start pulling back, the bonds have to make a very sustained move over time. When I say over time, we're talking about months. When the stock market peaked, the bonds had been selling off for like 5 months. 5 months, okay? And the stock market was ignoring it, just making new high after new high. So you can't go by, 1-to-1 relationship. No, I say that all the time. So the bond market, it takes time for the effects to be felt. All right, Alex, about banks. I was amazed to see several very known European banks, even from my country, okay? Interesting. I don't know. It doesn't matter why. You know what, Alex? It doesn't matter why. Hey, look, let's take a look. Since you mentioned the banks, let's take a look at the S&P, right? XLF, right, is the ETF financials. This is the banking sector of the S&P. I mean, look at this. This is the banking sector. So, and look, today it's green, right? The nice, interesting little gap there. But I mean, this is the banking sector over the first quarter of the year. Look at this. Or over the previous month or month and a half. So it doesn't matter why. What matters is it's weak. That's all that matters. Okay. So if the banks are losing value, that means people aren't interested in them. There's something wrong. Usually internally, there's some kind of fundamental problem. That's usually what the chart reflects. Okay. The charts often reflect fundamentals. in some ways, but not all the time, because if there's a lie in the market, I mean, look, that whole SVB situation, they were lying. Okay, they were not exactly transparent about their position. So everyone thought the bank was fine, right? And as long as everyone thinks the bank is fine, I mean, prices weren't going crazy until the truth came out, right? And then it had to be repriced. So don't ask why. It really doesn't help to ask why. It doesn't matter why. What matters is that it is, right? That's all that matters. Does that make sense? So I hope that answers your question. People always get wrapped up as to why. I'm sure if you do some more homework and maybe look into the fundamentals more, maybe you'll find some reasoning. But the charts pretty much, since all the known information in the world is baked into the charts, right, which is part of efficient markets, then really you don't need to know why. You just need to evaluate the chart. All right, hey Kai, structural. Oh, he's answering the question of the industry. Especially since the great subsequent increase of regulation. Okay, there's your reasons. Thanks, Kai. There's also apparently inherent European risk or weakness, but I can't remember out of. Okay, well, I don't know how they do things over there in Europe, but obviously we don't do things much better here in this country either. I mean, they're always going to take advantage. I know Europe, especially certain countries, are notorious for corruption. I remember I spoke to a guy from Romania, okay, a while back. And he told me, I said to him, well, why don't you put your money in the bank? You know what he said to me? He goes, they're going to rob me. You can't trust banks over here with your money. They steal your money. I'm like, really? Banks do that? Yeah, in Romania. Anyway, and they still got those guys in jail, man. I don't know about Romania. Hey, Milad, how are you? All right, let me see what we got going on here. Okay, wait, so Steen, I'm just going back on these questions. I missed, how can I miss Milad's question? I'm sorry, Milad. Can you look at XRP? It looks like it's okay. I noticed that on the daily chart before this move, also still waiting for you. I know. You know what, Milad? The weather's getting better now. So now things are, you're much more likely to hear from me. I apologize. I definitely want to come into the city and meet up with you. I'd love to do that. I enjoy things like that. So definitely, I haven't forgotten about you. I just need a little more time, and of course, better weather helps. Okay. So anyway, thanks for still following me. All right. So XRP, let's go to a weekly. Now XRP, let's take a look at this thing. Now keep in mind, I saw some stuff about regulation coming, right? Like the SEC and the CFTC, and they're all trying to figure out who's going to regulate what and how they're going to define things. So keep that in mind, right? I saw there's some videos popping up about that, and that can affect things, right? Things that charts cannot account for. Keep in mind, charts can't account for everything. If there's a surprise in the future, the charts aren't going to know about it. Price has to adjust. Charts are just a history of human nature. That's all they are. Human nature as expressed in price action, right? So please keep that in mind. We're evaluating history, and we're trying to gauge probabilities and risk based on how people have behaved before. That's what we're doing here. All right, so as far as XRP goes, right, interesting move, but look where we are, right? So first thing, you have to look at your levels with these things, right? Look at this. So XRP on the move, but it's not really, if you're not long, this is not impressive at all, okay? Because look where you are. You're sort of in the upper part of the range. This could be driven on some news, but this looks like a consolidation to me. There's no trend there. On the smaller time frame, sure, there's some action. You have a higher low, but you're going to this upper part of the range. So bad place for new longs. If you are long, good place to be considering getting out and locking in some profits, right? And giving this thing a chance. But understand that XRP is far from being a leader. If Bitcoin gives up, this thing is probably not going very far. So again, always keep that in mind, right? Bitcoin is the leader. Look to the leader. And bigger picture, again, there's really nothing spectacular going on here. Now, so as far as this recent move, maybe it's based on some court cases. I know there's a court drama with this thing and with the SEC, whatever, and maybe it's the movement is coming from that. I don't know, but like I said, levels, right? And as long as you are near this level up here, it's not a good place to be long. all right, in my opinion. I don't think we're looking at a runaway market. Rates are not supporting these things. And if rates continue where they're going, like we looked at in that bond chart, this is just going to suck more longs in. And then, its potential is limited. Okay. So look, these altcoins, they'll have their play again maybe someday when we have easy money. And I don't see the easy money yet. Okay, I don't see it out of the bond market, not yet. We're getting close, but it's just we have to see how this move plays out. Does that make sense? So when we don't have that information and we're waiting for the market to give us some sort of confirmation or something, and these things are starting to get our attention, go straight to the structure and straight to the levels. Okay, if you're near a resistance level and we're not exactly in a bullish trend, not a good time to be buying. Okay, so good time to be reducing risk. Does that make sense? So I hope that answers your question about XRP. Let me know if you still need more clarification. All right. Quick comment on your thoughts on the indexes based on your, okay, so indexes, right? Indices, SPX. So as far in light of the bonds, first of all, the S&P has been acting relatively weak, okay? Look at today's candle. This thing closes, it's basically closed in a couple of minutes, right? Bearish pin bar on the S&P. Not good if you're long. So the S&P has been behind this whole thing. The Nasdaq's been a little bit better, but look at the levels on the S&P. This thing is not exactly something to be excited about, okay? Which means a lot of stocks, there's a lot of weakness. In fact, my trade scanner has been calling lots of shorts, and it's interesting to see that even when the S&P has like a decent day, it's still calling shorts, which says something about the internals of the stocks, right? There's not a whole lot going on here. This S&P is just being driven by a handful of stocks, basically. Same with the NASDAQ, right? The NASDAQ 100, it's like NVIDIA driving the whole thing pretty much, right? And maybe a couple other stocks. If most of the stocks in the market are not really benefiting from this, this is not a healthy market. And you'll turn on the TV, oh, markets are doing great, blah, 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 blah. It's all nonsense, right? And the scanner, I noticed, keeps calling shorts. So that says something. People are selling. And I've seen some good results. Some of the people that have access to that scanner in particular have been reporting good results, meaning they're taking trades and they're getting out green. Now, again, the trades are only good for like a day or two. These aren't like, you hold on for weeks. It's just a couple of days maybe. But he figured it out. And it was nice to see that feedback. Anyway, to answer your question, this does not look good. And if the bonds continue the way they're going, it only says that this has potential to go lower, not exactly higher. In order for these things to rally, we need a rally in the bond market, okay? And I don't see it. So it doesn't mean markets can't be irrational and do something stupid like this. They can. But the question is, how much potential do they have? That's the question. People just want to make money. They don't care about, oh, who cares? I just tell me where to buy and sell. Well, how much potential do we have in here? In order for the S&P to really do something spectacular, first of all, we need to start clearing resistance levels. We haven't cleared any major ones, right? These are your major ones. We're not even in the zone, and the bonds have turned. So this is acting relatively weak. If there's a sell-off in the market, I mean, it looks like the S&P is going to lead the way. All right, does that make sense? Which means it's a bad time for stocks, and why I've been so hesitant with the long-term portfolio. All right, NASDAQ. Okay, take a look at the NASDAQ. NASDAQ pushed a little further. Like I said before, this gets everyone excited. This gets everyone to think, oh, yeah, we're in a rally, breakout, blah, blah, blah. It's all nonsense. This is not a breakout. This is a false breakout. Okay, it's been here before. Look at the price action in that area. That's a fake out. All right, if you ask me. So bad place for longs. If you're long stocks, I hope you like pain, because looks like pullback is coming. How far does a pullback go? No way to know. If the bonds continue to push lows, that's going to add to the momentum here. Okay, so I can't give you some kind of concrete forecast and say, well, the NASDAQ is going to go all the way back to 11.5. I can't say that because it may stop halfway. I don't know. Things change. New information gets processed into the market. Does that make sense? So I hope that answers your question. Good question about the index. Not too many people ask me about those. Okay, hey, Max Sood. Okay, hold on. I'm just trying to catch up on your question here. I entered the market at 27.8 as a long. Do you think it will come back to that? 27.8. Okay, well, listen, man. You need to follow me more. You should read my trading view articles. Okay, I don't know who got you into that one, but you bought into a resistance. All right, so you bought in the worst possible area. Now, it doesn't mean that it won't fool around. Maybe it'll test 30K again, but it's not about whether it does or not. It's about the probability. Okay, the probability right now favors a bearish movement at least to 25K. That's what probability favors. That could be wrong. Maybe it turns, but right now there's a sell signal in play. So I don't know what to tell you about that one, right? You have to determine how much risk you want to take, because that's not a good price. I'm not going to sugarcoat anything. There's a sell signal in play, and I'm looking at 25K. So it doesn't mean we'll get there, but you should at least do something to mitigate your risk. That's all I can tell you. Okay. All right. Dollar. All right, hold on. Let me just jump across. All right. So let me just go do a few more here. Okay. So Peter, gold. Okay. Let's take a look. Can you take a look at dollar? Okay. Hey, Jimmy. All right. Hey, Jimmy, how are you? Banks haven't taken into considerations the speed of how things move now. Back in 2000, people weren't even using smartphones. But now Twitter, that's true. Information certainly moves faster than it moved in 2007. I was active in the markets back then. And yeah, I would agree with that. Things move, things are like almost instant now. Back then, things were kind of instant too, but it took a little bit longer. These things like Twitter were not as powerful as they are today. All right, let's take a look at gold real quick. All right, so now gold, again, this is the run for safety. All right, gold has the failed high up here. Now, what are you saying about gold? I can see 2070 USD possible. Well, let's see. Where is 2070? Let's put it on the chart. 2070 is here, about there. Now, let's take a look at this in light of the bigger picture, right? The weekly. So you're very optimistic. Okay, you are looking at the high of the range, which, okay, it's a possibility. But the thing is, what you have to realize, Peter, is this entire range is a high probability sell area. If I was going to buy gold, I would not buy it in that range. Okay, if I had gold to sell, that is where I'd be happy to sell that gold. Okay, and as you can see, there's a sell signal developing here on the weekly chart. So with the bonds going the way they are at the moment, unless the bonds turn and the bonds start showing us easy money, this thing is in an area to sell, okay, not buy. So I think 2070 is extremely optimistic. I think there's a much greater likelihood that this thing fails somewhere before that, especially if the bonds continue the way they're continuing, because that means bonds mean stronger dollar is what that means. And speaking of the dollar, let's take a look at the dollar index. Let's take a look at the dollar index, as Seinfeld would say. So here's the weekly on the dollar index. Now people are going to make the mistake and they're going to say, oh, this is bearish. Well, this leg is bearish, but the dollar index is not exactly bearish. Okay, it's got a lower high, but it has a support here. What price is this? That's around $1.03, 103, not $1.03, 103. So the $1 area or 100 area on the index, right? That's basically what you're looking at. If that holds, and it's trying to, if that holds, we're just looking at a consolidation retrace on the dollar. That's all we're looking at. This thing, if this thing continues higher, right? And the sign will be if it takes out 105.5, basically, in the next few weeks. If the dollar does that, that means bonds are being bearish, right? Bond prices are going lower, rates are rising. That's what that would tell us. If the dollar finds that strength, then look out gold, okay? Because gold, you're looking at gold back at 1800. That's what you're looking at. So please keep that in mind. If this dollar stays intact, if this structure stays intact, right? We have a lower high at 105 and it takes out the low at 103 or whatever that is, and you see this thing pushing lows and the bond market agrees with it, then you'll see gold at 2000, whatever. Okay, then you'll see the strength in gold, because gold is just a dollar hedge. Does that make sense? So it's important to keep an eye on that relationship, and thank you for asking. Okay, all right, so yeah, okay, I answered that question. So BTC USDT, it's the same thing. It's the same thing. Alfredo, how are you? Okay, so thoughts on, all right, so if I missed your question, I apologize. Like Tony, I missed the dollar Turkish lira. Pal, hey, how are you? Long time no see. All right, so look, let me see what we have here. Tilray. All right, let's take a look at Tilray. Do you actually look at that? All right, so do I master pattern on your chart that with the line? I'm not sure what you're talking about there, Alex. Don't know what that is. Okay. TLRY. I remember this pot stocks, man. Are you I don't know what you're smoking, man. Are you still looking at pot stocks? No, I'm joking. I'm joking. So here's the thing. These things, first of all, these things are a joke. Okay. Um, how much is this thing right now? $2.61. This one used to be the big mover, right? In this sector. These things are out of play. This thing is pushing lows. This is a weekly chart. All right. So I wouldn't really, there's really not much to say about this. Let's open this up a bit. There's really not much to say about this. You're fighting a market that stinks, number one. What are your thoughts? All right, so I'm telling you about the cannabis stocks. Also, your thoughts on the meme stocks. All right, look, meme stocks only move on hype. They have no real intrinsic value like AMC and what was the other one? I can't remember the other one right now, but you know what I'm talking about. Don't if you're going to day trade them, that's one thing, but don't think that there's some kind of opportunity, because they're not. They're very temporary. Okay, and they're just going to react to things. And if rates are rising, they're going to suffer. I mean, look at this, right? The pot stocks were highly speculative. Look at this. This thing sucks. So if you believe in this nonsense in the future and you want to own some shares, well, I guess now is a good time to get into these garbage stocks. But there's a good chance this thing goes to zero. Okay, so if you're thinking long term, I wouldn't waste my money with these. Okay, it's just the way it is. Maybe at some point that'll change. Okay, and if you want to know, well, what point will that be? You need to at least see some resistance levels get taken out. And I would say the first one on Tilray would be something like this, 359, something like that, at least, at minimum. And then you want to see this one get taken out. Okay, which is, what is that? How much is that? 512. Okay, up here. You want to see those when the chart can start improving its structure. That means money is flowing back in. All right, but you have to be careful, because look, I mean, you had an instance here where it broke above temporarily. Okay, got everyone all excited, and then it just sucks all the morons back in. And then look, so there needs to be some sort of. It's not just about the levels alone. There has to be some sort of fundamental backing. Okay, at minimum, the bond market should be supporting you, because these, just like anything else, highly speculative instruments, okay, which this is, needs cheap money. Cheap money comes from low interest rates. So in a rising rate environment, these have very little potential. All right, so to get the signal to start buying these things, if anything, the bond market will at least give us the initial sign. Okay, and it's not a one-to-one thing, but that's when these stocks, meme stocks, and all these highly speculative stocks, that's when it would make more sense, when cheap money comes back. Does that make sense? All right, so I hope that answers your question. All right, you guys. Yeah, I don't want to overdo this here. Okay. Yeah, Alex, I don't understand your question on the Bitcoin chart. I don't look at that. I don't know. I don't know what you're talking about there. I don't use that. With the line at 22.7, this is just the chart line. No, this 22.7 is just a support level. If that's what you're referring to, right? That's just a support level. It's a historical support. All these lines in my chart are historical support levels. Some of these are just from back in time, so you see like the bunch of them together like that, or they could be from a smaller time frame. But that's just all that is a support level. Okay. GME, that's it. GME, that's the one. GameStop. Is that the right symbol? I can't remember. Anyway, but that was the big one that everyone was going after. So like, again, it's a speculative stock. If you're going to day trade them, that's one thing. Invest, not a great idea in my opinion. Okay, I could be wrong, but that's the way. If you're going to invest, you really want to find stocks that have true value, stocks that will pay you to hold them, stocks that dominate their businesses, like good solid companies, not GameStop, okay, or AMC. Anyway, okay. All right, so Christian, I went over that in the beginning. So watch the thing. I gotta wrap this up. I'm sorry, pal. I can't answer all these questions. I gotta wrap this up. So you guys, again, thank you so much for watching. If you like my video, please press the like button. Please subscribe. Press the boost button over there on YouTube. If I missed your question, I apologize. Please come back next Monday and ask me again. You can also send me a private message, in the Discord community. Check the links in the description. There's a free area there with a lot of great resources. Okay. Also, if you want to know about my trade scanner, you can also ask me about that as well. All right, you guys. So, hey, everyone, thank you for your time with me today. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.